points on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in at September 15th, 2021, and the stock market is hitting support, and I bought $15,000 worth of Airbnb Leap options. We are going to go over those, but I did also make a couple of other plays today, but we definitely have a lot to talk about. The market is hitting a very, very important point. So right here, this white line, that is the 50-day moving average. I'm going to show you another chart right here. We're going to zoom in on it, make it really close, but this is why it's so important. We've talked about this many times, and if you've noticed, we are approaching the middle of the month, and a lot of the last 4 times we dropped, all of them happened at the middle of the month expiration. We are 2 days away from that, and you see where things are shaping up. But why this is so important, because over the last year, January is right there, you have had this test about 9 times. 1, 2, 3, 4, 5, 6. They're being generous. I'm counting 7. And I guess when you look up at the other one, it shows 9. So that's what we got around here. But 7 to 9 times there. We'll keep it a little bit broad. But the point is, this has been your buy the dip levels. If you are a buy the dipper, I don't know how you identify, but we are about to see if there is dry powder on the sides. If we do break through it, we are going to see a lot. Last time we came close just 1 month ago, so this is a very important point. Now, we also got the CPI today, so all of that came into play. It was kind of a point for team transitory. However, there was a lot packed in it, and it could pretty much go either way, and it's bringing up a lot of questions with a lot of the things we saw. So clearly, there is a lot that we need to go over. So I got the plays, I got the keys, all the trades that we made today, including the logic behind those leaps, and then what we got for the rest of the week. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description, and it's pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the stock market. You can post the plays, see the plays, watch the watch list come to life. And yes, if rom-coms and stock markets are your thing, then yeah, we are the place to be. And the most important thing you need to do, post or watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info. Shout out to chat, baby. So, right off the bat, today had a little bit of everything, but it really did highlight that the market had a lot more on its mind than traders really thought. And with that, I'm talking about the tapering. So, even though we got the CPI, we're getting Fed Powell next week, this has been the debate. The market still continued the trend that we saw over the last few days. If you guys really want to see the last 3 days, we didn't see any gap ups prior to this week, really. You started off with Friday, gap up and sell off. Yesterday, gap up and sell off. And then we did the same thing, and we barely went above VWAP. So this does look a little bit suspicious in that sense, but everything started last week. Again, if you remember that decline, if we even come back to last Tuesday, this was economists and the banks pretty much downgrading the outlook on the economic recovery with COVID and all of that. So this has really been the key driver of markets. Even though we have been talking about tapering and CPI and all of that stuff, there's so much confusion and really wait and see approach. I guess lack of clarity from the Fed, more or less. It really depends how you're looking at it, but it's clear that the market is just taking focus to a lot of the other things, and we even talked about it today. The other things at play, which could be more important and are kind of weighing on the markets here, you have the Evergrande situation. This is China's largest property developer, and then you have the debt ceiling with our government, as well as now what we said with the economic recovery. So depending on how some of these things play out, and then as we get closer to this announcement next week from the Fed, they may or may not announce the tapering, but now that print that you got here today, it offers some flexibility. But depending on what happens, I would not be surprised to see the market get the ruling that it wants with the tapering and then quickly start to focus on all of these other factors, which are starting to kind of pile on. So the real key moving forward is going to be just juggling all of these and just understanding here when the market kind of gets a signal, if anything kind of tips one of the scales. Now, that being said, this is why the inflation number today, it had a lot of important stuff. And like I'm saying, depending on what you were looking for, you could have found it in today's CPI just because you saw it hit expectations slightly below on the core. So it did highlight that inflation is not increasing anymore. However, it is still elevated. And one thing we went over here, this is your first pretty picture. This one's crazy to me, but they have made some changes. It's not to the core CPI, but when you do look at it, they have different metrics broken down by the labor statistics. They have this new metric, which is pretty much, it's not called this, but it's the core, and essentially it is the CPI excluding food and energy, which would be the original core CPI, but then it also includes auto prices because they went crazy during the pandemic, and then also the price of shelter and housing. So if you exclude those three main categories, which have been the source of a lot of price pressures, you are still getting a print above 3%, which is, again, about 50%, 1 percentage point above the Fed's target. So even though inflation went down month over month and is kind of showing that it's peaking here at the top and not increasing, that's good for transitory. However, a lot of the other factors were still showing inflation, and that's why the Fed next week is going to be so important. And then this kind of gives us some clues because some people are saying that this print gives us more flexibility on the tapering announcement next week because some people thought Powell was going to announce it at this meeting, but now given this number, next week may not be the week, and then it'll buy another month of time for more of these taper talks. But then, like I'm saying, all those other factors, those might start weighing a little bit more. So coming into the rest of the week here, really the main thing economically is going to be consumer confidence. You're going to have that on Friday, and last month was a really bad report. You saw some market reaction following that, so we're going to see how that plays, and then moving forward, it's just going to be watching if there's any developments with the global recovery, and by that I mean anything related to economic slowdown, the virus kind of hurting or closures. Again, even China had another lockdown scare again in the last 2 days, so anything related to economic growth and recovery, that is seemingly the primary driver right now. And then if any of these other dicey situations, Evergrande, debt ceiling, anything like that, if those start to get out of hand there, that will definitely be another focus. Now, coming into the company news and events here, starting it off with China, this one came after hours, and this one's pretty interesting, and it kind of highlights a little bit. I wouldn't really read into it too much, but if you remember the call last week between Biden and Xi Jinping, we were talking about it. It seems like there wasn't any rosy developments that came out of it, and then it even led to us doing another probe. But now today we found out that Xi Jinping did not accept Biden's offer for an in-person meeting. He told Biden that the U.S. should tone down its rhetoric against China, and they did not confirm any sort of meeting or summit. That's what Biden wanted. So it's kind of giving us some insight into that situation, but right off the bat here, and even like we saw at the beginning of this week, China is definitely making headlines this week, so keep your eye out for that. And then that's the next piece of news right here. We got reports of protests and a lot of things going on at Evergrande. Disgruntled Evergrande investors, they crowded the HQ to protest, and even in this picture, we watched some of the videos. This is like one of the managing directors or managers of one of the segments that's handling the money, but Du Jiang, that's his name. He's literally in the lobby of the company just getting shamed by everybody there, and they are just asking him questions, demanding their money back. You know, you have people literally laying down next to him saying they're not going to move, and people really just grilling him. So the situation, it's getting pretty out of hand there, and there's been a lot of back and forth on whether or not China's going to bail them out or not. The government did help them hire a strategist or some sort, but the situation's going back and forth. But like we said, this really could be the Chinese Lehman Brothers. However, I personally don't think it's at the breaking point just yet, but these are definitely not good signs. So definitely keep your eye on that situation. And now coming into more news, Coinbase, not necessarily related to crypto and the performance of the price recently, but their junk bond offering is highlighting that crypto is just going mainstream because they were able to raise their offering amount and lower the yield that they were offering given the demand. So it's not like they wanted to dump a bunch of shares or raise all this money. They had this bond offering. I think they only wanted to raise about a $1.5 billion, but it was $7 billion in demand. They ended up upping it to around $3, and they were able to lower the rate that they were offering because demand was so strong. So and even pensions, just how they're viewing crypto in general, this is a very, very good sign. So that happened today. And then Apple, we got the event and they released the iPhone, the iPad, and a new iWatch. They got a lot of different feedback. Wells Fargo said that the lower priced iPad will actually help raise their ASP, their average selling prices for their products. So they like that. They thought that was bullish. Then Wedbush, one of their analysts, said that the 1 terabyte was the most notable development out of all of it for demand, and that demand should increase now with that option alongside people want to just refresh the phone and then get that 5G access. And then Evercore, they were kind of along the lines of expecting, people refreshing their iPhone, but they said nothing was too exciting out of their event. So a lot of people were watching that today, but to give you some insight into the iPhone releases, here is how Apple stock has actually traded after every single release. So even the original iPhone, that was the only time the stock really surged, and this was back in 2007. They jumped up 8%, but since then, only the iPhone 5 led to a positive gain. iPhone 7 and then iPhone 11 have led to the stock price going up following one of these events. So a lot of people were kind of expecting this, and the result, they did drop a little bit aggressively there with the market. So that one was very, very interesting. But now coming into the next piece of news, the Biden administration is actually going to be reviewing the Fannie Freddie capital rule that required mortgage giants to hold billions of dollars in reserves to protect against losses. They're saying, or the housing administration said, that this leads to overall high costs. So they're going to be reviewing it. And now this one could be a very interesting one, because this mortgage insurance, or this money they're collecting, this was part of Dodd-Frank in a way, and it made sure that these banks had capital. So what this is going to do, it's going to be interesting, and I will be keeping my eye out for that. Then Yum Brands in China, this one was interesting. They said that they are expecting their third quarter operating profit to be 50 or 60% lower. So keep your eye on what's going on over there. Even China did make a warning on traveling over the holidays because of the virus too. And then finally, Crocs. This one was a big highlight today. There was a couple of more buyout deals, I believe like ZBH or something like that. And tech stock, they said that they were looking to sell some of a unit. So Crocs was a little bit differently, but it ran during that same time. And then they had the news that they are accelerating their buyback program, and they're upping their revenue guidance to like $5 billion by 2025, which is pretty insane for Crocs. We talked about it, but overall, the market showed us a lot today. The tensions are rising. We are at a key level of support. What is about to happen should be exciting, so I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 or 4 different stocks that I'm going to be looking at. I got 2 that I'm going long on, and then 1 that I'm looking for the put side. But the first one, sure, I'm going to get a lot of questions about this, but Airbnb, I decided to go for the 2024 leap. So I'll show you it. I like it long already for the long term. We've been buying it even since IPO on December. But a couple days ago, the 2024 leaps came out. So I said, okay, I could get a little bit of leverage and then get it on the Robinhood, and I could kind of venture a little bit away from my deposit there to kind of appease the desire I have to own Airbnb forever. But I wanted to take advantage of the leaps. I'll show you when I get to the chain. And then the fact that it held up this morning, I really, really like that in the middle of everything. But now as far as the play, I decided to go with the 2024 Airbnb 185 calls, and I had to spend $3,700 a pop. I got 4 of them. Initial investment, $14,800. They went up for a little bit on the day. Now they're coming back down, but I will tell you, there was some liquidity because a couple of you guys got in on this with me, so the spreads are tight. But before that, I had to even pay a lot for it because most of these spreads on these options are just absolutely illiquid. So it's usually a $4 spread or something like that, so be very, very careful with it. But again, I thought this would be a good way to get some exposure with this stock. If it does come down from here, I am going to be buying more on the long term and doing stuff with that, but I wanted extra exposure. But the one thing I like is the amount of time that's here, and I don't know if you guys have ever seen some of the contracts when they first come out, especially these new dates, but usually it's like an IPO where the stock first comes out. They're initially pricing it, and usually there's an opportunity for mispricing, and that's what I want to take advantage of. But I do plan on holding these for a while. I mean, if I could get free shares and get my initial investment of $15,000 back, that would be great. I wouldn't be opposed to that. But overall, this is just going long on this stock in general. And with what we talked about yesterday, if that reopening revival is upon us, even looking at some of the commodities and how some people are talking about selling tech and everything here, I think Airbnb falls in a nice middle. And again, it did hold up today, so I like that. So it's mainly because of the stock, but now with the first couple days of these leaps, I did want to take advantage of it. I think a good example would be Roblox. if you look at when they first started trading options, I believe the first 2 days, I'll go to like the January 23rd, you could see it here on the reverse, and this is the risk I am going to be taking, but the options priced really, really high, and then that quickly did change. So really, it's going to be a coin toss, because you'll see in some instances, depending on how closer or further the money, and it depends what the stock is, there's usually a lot of volatility in the couple days, and now this was the first time it was trading options, so it's going to be a little different than the first time the leaps are announced, but there will be some pricing and volatility inherent that increases the risk as well as the opportunity. So that's going to be the first play that I made. The second play, it's going to be Viacom. Where did my Airbnb? I accidentally exited out. There you go. But the second one is going to be Viacom, and I went plays on this long today. I talked about this yesterday, and we've been kind of discussing it throughout the week, but I'm expecting some level of merger, buying, them buying a company, or even a buyout, somebody buying them. But pretty much by the end of the year, they've stayed flat. They offer a lot of different value depending on who wants to get into it. Again, the streaming providers and all of that, different companies, different synergies, all of that stuff. But with the fiscal year approaching here in October, I think there could be an opportunity. So I decided to add to that one position that I had in January, and that's why I was able to pick January, because essentially I'm thinking that the deal is going to happen either sooner than later towards the end of the year. If not, I will probably have to reassess my plan. So now I have about $827 in all of these plays, down on every single one of them except the ones that we got today. But I grabbed 10 of the 57.5 calls. I already have 5 of the 55 calls for November, and then 10 of the 60 calls. So I got closer to the money, but those plays are still down 27%. So we will see what happens, but I do like that idea, but it is purely speculative, so watch out for that. Then B-Fly, I grabbed 200 shares, I believe at like $12.70 today, but they had a weird Apple mention because they just showed up on the screen. There was no real mention of the company, but they were announcing some of the features on the iPad, and they showed an example with one of their products, so I liked it. You guys were able to give me some information. I was able to quickly look into it. It seemed like it was a hype play. You had some names like Kathy Woods brought up all the way down to Bill Gates, so I liked it. It looked like a SPAC, but it was at the bottom of the range, pretty much 20% higher than that floor of $10. So I was able to justify a small amount, spent like $2,800, $300, but it's for shares, not options. I'll hold this and ride it out. I mean, a good example recently would be like IC, but then again, there has been some that have not really paid out. A good example of this, last time I tried to get a hype play on the dip where I liked it was Valander, and I believe that one's down like 40% right now. So that one I went a little bit bigger, but sometimes it works, sometimes it doesn't, but that's why even in this case, if you notice, since I bought it, I have not touched the position. That was in June 8th, so yeah, down 44%. I'm still just riding it out there, so that's why it's easier to do with the smaller amount, but usually the best part about any of these plays is when you go with the shares, you actually get to hold the stock, so that could go a long way, so watch out for that. It was a pseudo mention, but you saw what happened to stocks like GSAT just from the speculation, so keep your eye on that. And then finally, BABA, I made a rollover on one of my plays. The premiums are up, and I'll show you on the option chain. I like it, and you could still get an opportunity in here, but it's really going to be hit or miss because now the premiums are expensive relative to the time left on some of the contracts. Otherwise, the prices of the options have actually came down. So what I ended up doing today was, remember those weeklies I got on Friday? Well, they went up 100%. I sold them out at 50%, but I sold 8 out of the 10 because they were all over the place given the fact they expire Friday and they're still decently out of the money. There is more China fear than this stock being closer to the money. So that's why I wanted to get rid of those quickly. It was a decent sized position. I took the profits at 74, and then I recycled most of the amount into the October 105s just to get me time and make sure I have exposure. And then I kept 2 of these for free just in case anything did develop on the week and I'll be able to ride it out. But this right here is just rolling over a certain play and just keeping in mind how much time you have left on a contract, the value, and then if you want to keep it going, how you could go about playing that. So to show you the option chain with what I was saying about the pricing, it really depends on how further or closer you are to the money, especially if there's more time. But even the ones with a decent amount of time, like even October, you start coming down the chain, you'll notice a lot of these have just not picked up at all, and that's the risk with it. You come closer to the money, some of them are going up a little bit, but this is what I'm saying, they're back to the same price they were trading before that original fiasco we saw about a month ago. So the option is cheap nominally in price. It's the same price it was at one point, but now there is about a month less of time on the contract. That has a way, way bigger difference. So that's what I'm saying. And then if you even go to the ones with more time and then you go further out the money with more time, you'll notice some of them picked up a little bit better, but it just starts depending on how close you start to get to the money. Then it's a little bit more comparable, or at least it's starting to run past the highs that it had last time. That is the IV doing its work. So keep your eye on that one. If you're going to play it, you're going to have to be diligent, but watch out for them. As far as everything else, I'm going to be watching McDonald's. I wanted to see the value plays today. The fact that they kind of closed without moving much, they're still on my radar, so watch them. Watch ABNB. A lot of people brought this up today. I didn't know they hit another new low, and pretty much at this yield and at this price, they are now right back on that long-term target. We haven't got to buy them in a year because they just kept running, but that dividend has increased when the stock was up. So with this price going down, that yield is actually coming back to 5%. So I'm really, really liking that one. So I'm going to be watching them and just healthcare in general. Then Shopify, the plays that I got didn't really move up too much, even though the stock went down. So kind of a delay from yesterday. Yesterday they dropped further, but this one is still in the targets. I will be keeping an eye on some of those plays for tomorrow. Then Airbnb, like we said, and then Viacom, and then Uber. I'd like an Uber for the long term, but they just got plummeted today. So this could be a breaking point, could cause some liquidation here. We will see where it goes from there, but there was news after hours that the CTO has left the company. So stock didn't react too much, but Uber is at an interesting place both to see some more weakness and to start looking for some buying opportunities. So watch out for that. Then B-Fly, like we said. Then I'm going to be watching the bank stocks too. They went really, really crazy today. I think Wells Fargo was up at like 2.5%. Thankfully, they closed positive, but they gave up a lot. But then even like Goldman Sachs, they were up 2%, then ended up down 1.5%. So banks were all over the place. And then I would even keep my eye out on HYG. We look at TLT a lot, but HYG and high yield credit may get a little bit interesting there. So keep that in mind and remember how they relate. And then finally, Microsoft, total outperformer today. And then even after hours, they just announced that they are okaying a buyback and increasing dividend. The stock is up. It's been a leader. So I would keep my eye out for anybody lagging or leading. And again, banks do relate to that. And then finally, TLT and the dollar, man, today was crazy. This was probably the last thing that I expected to see happen was come back to this point. But one thing to kind of buffer that is that even though the yields did go down today, that's the nominal yields based on the price of the dollar, inflation expectations, the rest of the yield curve, all of that. The overall real yield has not gone down today. So that was kind of the bright spot, but not really. Otherwise, the dollar really would have had its move if it didn't have that gap down in the morning. It stayed the same. So we'll see after Powell or anything globally. But now with TLT, this did trigger something today. This is saying a pretty big warning. I don't know if there was an after hours or yeah, that didn't look real. But overall, with this thing being up here, it looks like there is some panic kind of creeping into the market. Otherwise, it could be an unforeseen factor nobody has talked about, or the Fed waving their invisible hand and we can't see it. But either way, it is telling us something, and where we go from here, it's going to be exciting. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining, and I need you to remember you got gifts. Take that to the bank, baby. But Nicole loves you. I love you. I'm going to see you in the morning. Let's go.